In this context, that's speaking at a New York Forum Africa in Gabon, we had economist Nouriel Roubini discussing the recent volatility that has been seen in emerging markets and the black swans that could derail Africa's economic growth story. So let's take a look.
Well, certainly there is now a concern that the Fed is going to first taper off faster than otherwise and then exit from zero policy rates. Until a few months ago, money was flowing in emerging markets, and the problem was how to handle too much inflows. Now money is flowing out, and in addition to the concern about QE exit in US, there is another concern that affects Africa. It is the slowdown of economic growth in China that's already led to a fall in commodity prices and an underperformance of equity markets in emerging markets. So you have two forces that both of them negative for emerging markets and for Africa. The slowdown of China, the worries about hard landing, leading the commodity price correction and an equity market underperformance, and now worries that the Fed is going to exit faster than otherwise, leading not only effects on commodity and equity markets, but also on currency and fixed income, both local currency and foreign currency. Now, some of those concerns maybe are excessive, especially about the United States. I think that the Fed is going to exit more slowly than the market and investors are now worried about, but certainly now we've seen downward correction of currencies in a number of emerging markets, including in Africa, and we've seen also significant increase in interest rates. You know, some of the spreads on EM debt, even in Africa, were quite low, but now they're rising again. That's going to imply that the cost of capital and the availability of it is going to be more expensive than before. Those are always negatives.
Right, okay, so let's shift the conversation to a conversation we've had earlier today in one of the panels, the black swans for Africa. And I want to get your thoughts, and I want you to look at it this way. In 10 years from now, given the development we've seen in Africa up till now, how optimistic are you about the prospects for Africa? Everyone talks about Africa being a massive economy, especially by 2050 in the context of the global economies. But your thoughts on the big issues that may derail this growth trajectory?
You have two scenarios. Some countries are going to have better economic policies and politics and are going to succeed, and other ones are going to do poorly. So there can be a virtuous cycle between less civil strife, more peace, better institution, better governance, leading then to exploiting natural resources and spreading the wealth and investing it into education, healthcare, human capital, infrastructure that feeds back to, again, stronger economic growth. And then the population dividend is truly a dividend. But you could have a vicious cycle in which institutions are weak, there is civil strife, there are ethnic and religious conflicts that leads to social and political instability, the use of resources exploited by an elite leads to corruption, rent-seeking, and that leads to social and political instability, to more failed states, to more civil strife, and that hurts economic growth. Some countries are going to go through the first route of a virtuous cycle. Some of them, unfortunately, are going to go through the other one. So we cannot talk about Africa as if it's one uniform continent. Even within Europe, we've seen the differences between the core of the Eurozone and the periphery, with the periphery now in a severe financial fiscal crisis. So we cannot probably generalize. So on average, Africa is going to grow faster than the last few decades, but there'll be a huge dispersion between the success stories and the failures.
Well, that was economist Nouriel Roubini, and Robbie, really in line with what seems to be the consensus when it comes to growth in Africa and what we need to start doing a little bit more effectively in order to leverage optimally off our position right now.
Definitely. Look, from our perspective, we still see Africa as a very, very exciting story. I mean, just looking at our market, I think only 3 companies, at least that we cover, have earned more than 50% of their earnings from the rest of the continent. That would be MTN, Tongaat and Ilovo. I mean, from a South Africa perspective, being sort of that launch pad into the rest of the continent, we still feel that South Africa is perfectly suited from a geographic perspective, from an experience perspective, and also looking at the companies that have actually succeeded on the rest of the continent and how they've managed to actually enter the markets. You know, it hasn't been a wholesale approach, but rather testing out the market, dipping their toes into 1 or 2 markets, experiencing it, understanding it, and then going sort of pulling the trigger. So from a, the dynamics, very in favor of a bullish outlook. Africa's population very young, I think majority under the age of 20. So, the numbers 2030, 2050, we're seeing basically a young population, an educated population coming through. It'll be a very sort of important destination for final goods and services. So, from a global supply perspective, you will see growing population dynamics there. And also, the amount of arable land that's available largely underdeveloped. So Africa could then also come and become quite a volatile and pivotal player in terms of world food supply. So exciting stories all around. Yes, the challenges are there, but there are means and ways to navigate.
Derek, how are you managing your exposure to companies that are growing their footprint on the continent?
Look, I think it's an important question, and one must actually look at the companies that have got good track records. I think investing into Africa and looking at the political challenges and hurdles that one has to cross, you come back to looking at analyzing a company. You need to choose a country that's got good leadership and good leadership potential. And again, when choosing those companies, you need to understand the companies that have got good management and CEOs in place to understand how to manage that growth. You don't want to go and invest in companies that have got huge exorbitant growth strategies with a lot of downside risk. You rather want to go into something that's got good cash flow, piggybacking off the growth and the infrastructure that's taking place in Africa, and look to benefit from that from a secondary perspective. So there is a lot of risk. I think one does need to be cognizant of the fact that there's a lot of smart money moving into Africa, and it's moving in at a very slow pace. There's still a lot of, as we mentioned, a lot of hurdles that need to be crossed, and a lot of risks to it. So managing that and just getting your toe wet slowly is obviously key. You look at the retail space and the understanding of how the retailers are looking for growth in Africa, and I think that's an important little proxy to determine
where a lot of our retailers' valuations have come under the spotlight. So the likes of ShopRite, for example, at this stage of the game, does it warrant the kind of valuation given the kind of growth we've seen ShopRite managing to reap from Africa?
Look, I think one needs to be mindful that the valuations are very lofty at this point, and you've probably seen a lot of pricing in of growth that's taken place in the prices at current levels. However, the upside in Africa is truly great, and the margins are very thick. So, these valuations that you're seeing could be justified if they harness that growth correctly. So, it's not just looking at Africa as a continent. You've got to delve down deeper and say, well, where and which countries are going to benefit for the likes of a ShopRite? Where are the margins going to be great? Where's the population growth, and where's the demand going to come from?